What's up, everybody? Welcome. Um, Hope everyone is having an amazing day so far. And also, today is Mother's Day, so shout out to all of the beautiful queens that give us life and provide for us unconditionally every single day. Um, so yeah. But I wanted to make a quick video today about role reversals. Now, it's nothing really, you know, it's not a deep lesson. It's more of a fun lesson. Some of you guys probably already know, um, you know, I like to call them role, excuse me, role reversals. Um, but really, in simple terms, what it is just break of structure and yeah. So let's get into it, right? So as we know, in an uptrend, we're creating these higher highs and higher lows like this, right? And vice versa. In a downtrend, we're creating lower lows and lower highs, right? So this would be technically a roll continuation, right? A roll continuation. So what do I mean by um, what do I mean by role reversals? So I mean when the market shifts from bullish to bearish and vice versa. Okay. So when I say role reversal, right, we're going to need to identify when we shift from a bullish market to a bearish market. So what I would look for, right? So say um, say we have a bullish market, okay? So we've been going upwards like this, right? We've been going up, and then all of a sudden we kind of get this there. We kind of get this consolidated um, area and then maybe a spike up. Now, what most traders would see in this break right here of this structure right here is a continuation again. So they would want to, break that high and retest off like that. But when role reversals come into play, you know, we get that essential buy to sell, or in Wyckoff terms, if you want to, be technical with that, we would get that up thrust or that up thrust after distribution. So when we identify that, what comes next? We should see this aggressive impulse to the downside. We should see this obvious shift in the market, right? So we're switching roles here, right? So after the market has made that big impulse down, what would we look for? Well, this was, the trading range, right? This right here was that trading range, that previous trading range that we were in right here. And price had traded up and impulse back down. So now what we would look for, because you never want to trade out, you never want to trade out in the beach, right? You always want, you always want the waves to come back. to, or excuse me, I said that wrong. You never want to trade out in the ocean, I should say. You always want the wave to come back to the shore, right? You want the wave to come back to the beach, to the sand, you know? You want to feel that water touch your feet. Um, so when price, makes its wave back up to your point of interest, or just back up into that trading range in general, um, ideally we would be looking to sell again. And why is that? Well, because we had created that trading range, and then we play off of where obvious momentum is in the market. So if I see a big old impulse down like this, um, I'm going to assume that roles have been changed and we have became bearish in this market, whether that be short term, intraday, um, intra-week, swing trade setup, right? I don't want you guys to get too like um, you know literal with it, because everybody trades on a different time frame. So you might see a break of structure like this on the 15-minute, and then it'll go down for a little bit and then fly back up. And then you're going to question yourself like, oh, I watched Dylan's video on role reversal and it didn't work. And yeah, it, you got to study it, you got to practice, you got to know what you're looking for. And also, I wouldn't really be looking for overall I wouldn't really be looking for overall market direction shifts, like under, I'd say the 15-minute is okay, but anything under that, if you're going off of a 5-minute break of structure like this, um, I don't know what your win percentage would be, but I would imagine that it wouldn't be that good if you aren't a scalper. I will say that if you aren't scalping, then it's probably not ideal for you to use this type of um, thing on lower time frames. But um, yeah, it's pretty simple. And for bullishness, it's the same. It's the same thing, right? So a uh, we have a bearish um, trend that we're in, right? But then we get to this, like consolidation. We're gonna say consolidation. We would say accumulation, but this is a basic video, so we're just gonna keep it basic. But you see that downtrend, and then all of a sudden you start seeing the price holding up, and you got to think to yourself like, you know, when something hits a wall, um, when something runs right into a wall, there's kind of a stopping point. I mean, like, it doesn't take a scientist to know that if you run headfirst into the wall, you're probably going to fall back the other way. Um, so yeah, so when we identify, after you know obvious trends have induced retail, even selling on retail or selling on trend line touches, right? We identify that there is an aggressive push down, and then we need to see that push back up, right? Because we need to know what we're looking for after this accumulation, after this trading range right here. When we break out of this trading range right here, we need to know what we're looking for. So looking at momentum right here, we could obviously see that we're moving up. So what do we wait for? We don't trade out in the ocean. We wait for price to get back to the trading range for us to make our decision on what we want to do, right? So hope some of you guys are following along, and I hope, it's like I said, it's nothing too um, deep, not too deep of a lesson. It's pretty basic stuff, but yeah, it's really simple. You can implement it to your trading. Um, but yeah, let's look at like a couple examples on on the chart here. So look, now I know that I talked about role reversals, but essentially, um, you can also use this method just for like a simple break and a retest too. But for because obviously you want to trade with the trend, but some people like reversals for some reason, and I find myself um, trading reversals sometimes too. So, but yeah, so look, we're gonna make this basic. We're not gonna go deep into the market structure, but we can see we have this upwards movement in the market, right? And just looking at this, you guys can see that this is consolidation right here. We have this high of this trading range and this low of this trading range right here. Now, what we need to identify is where the uh, aggressive moves are, the aggressive impulses, the obvious areas of where we see money getting into the market, right? So we see that trading range, and what we identify is this aggressive drop right here. If you notice the behavior between this drop right here and this whole choppy trading range, you can see that liquidity is being built up here and then dumped off, right? It's being dumped off there. So what we would look for, right, what we just talked about is that um, role reversal like this, okay? So back in that trading range, we see the trading range, which if we do, if we do go to the line chart, it'll probably tighten it up a little bit for us. So this is that trading range right here. Now, you don't always have to get the most beautiful entries. That's not what trading is all about. At the end of the day, if you're profitable and you're making money, then you know uh, how beautiful your entry is super irrelevant, right? It's just nice to get low drawdown entries, sniper entries, right? But really, it's just psychological issues for some people, right? So you don't need to have just you don't need to catch every high or every exact low. It's impossible, right? So we identify this aggressive push down. Um, and the market makes its way down here, right, which is even more out in the ocean. But when price trades back up to that trading range that it broke, right, we would be looking to sell on this role reversal right here. Okay. or about, let's say we buy at this trading range, 29 pips for 100, right? Or maybe even more. Yeah, I mean, look, even more pips. So you're willing to risk, 30 pips on GB on Euro JPY, which is a decently volatile pair, to potentially make 350 plus pips. I can't complain. I wouldn't complain about that at all. um, but yeah, very simple. Next example actually is like right here. So look, we have that down coming off of this role reversal here. We have this down movement right here, okay? So we're coming off of a minor, you could say minor downtrend, since we are doing this video on the 15-minute time frame. You could say minor downtrend, and then we need to identify that accumulation. We need to identify that consolidation that we're in. So right here, we get that first initial, actually right here, we get that first like initial rut, that spring, you could say, because look at the chop, right? I want you guys to notice the intricate differences um in the way candlesticks move when money gets dumped into these markets, right? So choppiness, right? We identify choppiness, and then aggressive push down right here. I'll change the color of the circle so we can identify the two, right? So you see the red circle is where the money is being dumped. Black circle is where liquidity is being built up. So after this initial spring, right, and then price trades back up, right? When you see a spring or a demand level in general that is valid, you should see price trade back up into that initial selling climax. You should see price either trade higher than it or just back around that trading range of the selling climax. So we identify our trading range now, right? Which is like right around in here, um, there, or even this whole thing. It doesn't matter. Down to this spring here, it doesn't matter. Let me bust out the line chart. So just to tighten it up just a little bit. Um, so we see identify that trading range. Now, what did we talk about in the beginning of the video? We identify our accumulation, and then we need to identify the direction of the impulse. Okay, so we identified money here, and then price traded back above this very cleanly, above the 116.800 level very cleanly. And this is the top of the trading range right here. And when we see the market break through that trading range, we can identify that that is a clean break of this range. Now, once again, I might sound like a broken record, but you don't want to trade out in the ocean, right? You want that, you know, you want that wave to just come back up, right? And picture yourself standing on a beach, right? And the waves are coming up on your toes, and that's when you really feel like um like the current, like the current is coming in. Okay, I don't really know how to explain that in depth, but you just don't want to trade when the market is untradeable, right? You want to follow the wave. And right now, the wave has clearly broken to the upside. So when price comes back to the beach, to where you are, when price comes back to the beach, when you start to feel the water come up between your toes again, that's when you're going to want to follow that wave back out, if that makes sense. You're going to want to follow that wave back out, that current. It comes back in and then goes back out, right? It's very often too. The beach just, it does that, right? And it's never going to change. That's the way that the water is going to move. That's the way that the markets are going to move. It's never going to change. There might be different variations, um, but the behavior of the market will always stay the same. So once again, when price trades back, you don't need to have these, beautiful entries every single trade, right? Even though this is a really nice entry, but yeah, you're risking, 16 pips to make 137 pips. Um, so once again, I couldn't complain about that. But yeah, if you guys got any value, from this video, if it was pretty insightful, or if you just simply have fun, um, watching this video, give me a like, subscribe, also join our Telegram community chat at Outcome Reach. We'd love to have you in the Telegram community chat and watch you progress as a trader. We're just we have been seeing students grow tremendously over these past couple months, and yeah, it's been really really awesome. And all we want to do is just help people grow and finally make money in these markets. So I think that is the end of this lesson, and I had fun. Hope you guys got some value and some insight, and enjoy the rest of your day. Go spend time with your family, with your mother. Um, Tell her how much you love her, and stay blessed, stay grateful, and I will catch you guys on the next recording. Peace out.